Hi everyone, this is Mia at Effortless Mortgage. How are you guys doing? Welcome back to our channel. Today we're going to dive into a product that's getting more and more popular in today's housing market, B-lender mortgages. We're going to dive into some of the myths and misconceptions about B-lender mortgages and tell you what it is all about. So let's get started. First thing first, let's break it down. A B-lender mortgage doesn't have to be that complicated. It is not the traditional A-lender financing which is offered by big banks. Think of it as the cool cousin. It is considered alternative mortgage financing and it offers a different kind of helping hand when you need it. So let's start with misconception number one. B-lenders have crazy interest rate. Although B-lender rates are slightly higher than A-lenders and bank lenders offer, they're not out there to break the bank. Oftentimes, a lot of B-lenders are considered Alt A and they offer interest rates that are 1% or 1.5% higher than A-lenders or bank lenders. And sometimes, depends on where the interest curve goes, their rates are really close with what the banks can offer. One thing to keep in mind is some of the B-lenders do have a 1% lender fee, which is not often seen as bank lenders. Some people think B-lender rates are double what the A-lenders offer, or in 20% or credit card rates. That is simply not true. Back when the A-lender rates were about 2%, the B-lender were offering something in the 3% range. Right now, the A-lender rates are in the high 5s, low 6%, and the B-lender rates are in the high 6% and low 7%. So now you know the difference. Misconception number two. B-lenders are only for those people with bad credits. So that one is a classic. B-lender mortgages aren't just for people who have credit challenges. They're also for people who are new immigrants, self-employed, freelancers, or who have unique situations, because B-lender underwrite your mortgage based on a lot of common sense, a lot of the affordability, cash flow, not just on your T4. With B-lenders, it's not all about credit history. They also consider your overall financial story. Another example is that we often see a lot of real estate investors who have multiple properties, although their income alone will not service, but a lot of the B-lenders can use a greater amount of their rental income to help them qualify. So we do see a lot of people who are real estate investors use B-lenders as well. The misconception number three, B-lenders are only short-term fixes. Here's the thing, while some of the B-lender mortgages are for short-term and they're stepping stones, or you call them band-aid financing to help you get to the A-lender, a lot of B-lender mortgages are meant for longer term. They do offer from 6 months, 1 year, 3 year, all the way to 5-year terms. Common sense underwriting and tailored options can make B-lender mortgage product a very solid choice. Another benefit from B-lender that can be long-term is that for a lot of the self-employed professionals, they may report or they may write off a lot of their income on their tax return. They will show a lot of cash flow when you look at their bank statements. This is where oftentimes when they compare the tax benefit they get by being self-employed and by capitalizing on those write-offs versus a slightly higher rates at the B-lender versus the bank lender, oftentimes we see those professionals stay in the B-lender mortgages for a longer period of time, right? A lot of them, doing quite well with their income, doing quite well on their credit score. However, it's just simply they don't have the traditional verifiable income that the banks are looking for, and that leads to those folks stay in the B-lender for extended period of time. Misconception number four, B-lender mortgages are predatory. They're sketchy business. Now it's time to clear the air. A lot of B-lenders are multi-billion-dollar businesses. They have $20-30 billion under management. They are backed by institutional investors. A lot of them are regulated by the same regulator as the banks, which is OSFI. That's the regulator in Canada for financial institutions. They are called B-lender because their risk appetite are different than the banks, and they're really just servicing a different demographic and filling different needs from the Canadian borrowers. They are far from the mom and pop shops or anybody who's out to try to scam borrowers, right? Having that being said, always do your research. make sure you talk to a mortgage professional about what you're looking for. Ensure you read the fine print and walk through the commitment letter and make sure you know what you're signed up for. A lot of things will impact your cash flow and you need to be aware of it, right? So one example, A lenders do not collect your property tax on your behalf. B lenders would lump together the mortgage payment and your property tax payment in one payment. Make sure you have that clarity and know really how much is that payment for every month and how is that matching up to your cash flow. At Effortless Mortgage, our mortgage advisors always try to break it down for our borrowers so that they know exactly what they're in for. There's certain benefits with that. It's actually spreading out the tax payments over 12 months is a lot more manageable. You need to know it before you sign the commitment letter. You need to know it and know the cash flow situation. So now we've talked about 4 misconceptions about B lender mortgages. Let's move on and shine a brighter light on the benefits of B lender mortgages. We'll talk about 2 commonly recognized benefits about B lender mortgages. Benefit number 1 is flexibility. B lenders will allow you to have higher debt to income ratio. That means the total before tax income versus the monthly debt load that you're paying. With A lenders, that ratio has to be at 44% and maximum maybe 48-49% if you have excellent credit score. With B lenders, that ratio can go up to 60%. You can use up to 60% of your income to service your mortgages. Or sometimes if you have a higher down payment or you have a lot of equity in your house, they will actually allow you to go beyond 60%. It could be 80% or higher if it actually suits your situation. Flexibility, that is a really big thing. Another example of flexibility is credit score. Not everybody has the perfect credit. It could be a phone bill from 2 years ago that you forgot to settle. It could be something that a credit card that you've been overutilizing. A lot of those factors can impact your credit score. And if your credit is below 650, most of A lenders will take a pass on the mortgage, whether it's purchase or refinance. B lenders do not have a minimum credit per se. They do review credit. They do have a lot of underwriting about your payment history, but they're a lot more flexible than A lenders when it comes to credit. And really, they can help you consolidate debt. They can help you really rehabilitate. If you're buying a property and your credit is lower than 650, B lender is really going to be your best bet. Benefit number 2 is that when used correctly, B lender mortgages can help you improve your credit. So if you don't really have a credit history, by adding a secure mortgage to your credit history mix, it really broadens your credit payment history to any of the future lenders who are looking at your credit score and your credit report. And if you already own a home and you have a lot of credit card debt, car loans, and when you have a B lender mortgage to help you consolidate those debts and you're making payments on time, that'll really improve your credit over time. Eventually, after 12 to 24 months, you can actually go back to an A lender. It has to be really used correctly to really help you improve your financial situation. And that's another really important point. We always make sure that we fulfill at Effortless Mortgage. Our advisors always review your overall financials to see whether this B lender mortgage is going to be good for you and help you improve your credit score, help you better a situation, help you get over a life event, right? So if it really helps you achieve those goals, and at the same time, our mortgage advisors will also help you to work out a plan to see, like, are you going to be able to continue to stay in this B lender mortgage for an extended period of time? Or how do we try to really help you improve your credit, get your record keeping straight, and come up with a plan to help you move to a lower interest cost solution, whether it's a lender, alt A lender, credit union, smaller banks, you name it. If you're considering a B lender mortgage, don't let the misconceptions steer you away. Be informed, be smart, talk to a mortgage professional who is specialized in B lender mortgages, and make the choice that is right for you.
Learn more about your mortgage options. Visit effortlessmortgage.ca